I'm going to be giving, as today marks the official end of the classes for the first set or this set of the academy. And yeah, so I will tie everything up this morning, give you some information that would help you. And then I will tell you about our own way forward and how we want you to be a part of that way forward. So yeah, very, very interesting stuff to talk about this morning. I'm just gonna wait for like another 2-3 minutes for some other people to join, and then we would get cracking, and hopefully whoever joins us, they would catch up or watch the video again. So yeah, how's trading been so far for you guys? How's trading been so far? How confident do you think you are? Understanding, put into action everything you've learned. How confident do you think you are? How confident would you say that you are right now? So let me get like feedback from you guys. You can make use of the chat session to respond, please. Good morning, Mohammed. Good morning, Mo. How are you doing today, Mohammed? How has been your weekend? And how has been the holiday? So officially we went on holiday from Havilah Financial, and this is the first class after the holiday. So how has been your holiday, guys? Been good, amazing, Mohammed. I'm doing well. I'm doing great, fantastic. Everything good in the book. I'm doing well. Yeah. So talk to me, guys. How has been trading for you guys? Any challenges? Again, Mohammed, this is going to be the last class of your set. So this morning I'm going to be giving a kind of like summary. Gonna round up. My net profit this month is 2,902. Amazing stuff. This month end, the market was very volatile due to coronavirus. That's right. So unpredictable. That's right. I love it, Roy. I love that. I love to hear things like that. You're not just telling me about, you're telling me fundamentals. And this is fundamental that has affected all the markets. So yeah, so it touched everyone. All the hedge fund managers across the world were heavily hit by the coronavirus, unpredicted, unexpected. Still don't know. At the moment, it is being said that the market has overreacted to it, that they've overpriced it. But it's hard to say that because we still don't know. It's not fully contained yet. Okay, the World Health Organization has come out to say, look, guys, they think China has the capacity to contain the virus, so there shouldn't be travel bans, but some significant part of China is still locked down. But however, numbers showed that their factory numbers grew in the last month. So some speculations are probably that was the numbers before the outbreak of the virus. So we're still yet to get the real figures and real numbers for what's going on, but it is what it is. It really, really affected oil, tech, everything. China is the second biggest economy in the world, and you can imagine every economy has partnership or has an input that comes from China, or is the primary market where they sell their produce. So China is very, very paramount in the world economy of today that we're living in. So if anything rattles China, it rattles everyone. So yeah, thank you, Roy, for that. In 2 weeks time, we may get a bigger picture of what else are affected. That's right. As all nations started pulling their citizens back. It's a very, very serious stuff. So at the moment, we don't really know. I think the epidemic or the outbreak of the virus is real. It's as real as it can get. But I don't think, I agree with the notion that says the impact on the global financial market probably was overpriced. You know, bad news travels very, very far. People tend to react violently to bad news more than good news, to be honest. So people would wait and wait for good news to become extremely good before they react. For bad news, just a little bit of, and they would just go off. So I think all the markets just selling off was a knee-jerk reaction to the outbreak. So we may begin to see some corrections in the week that we're coming into. By now, you should understand what correction means. Okay, if market is going in a particular direction, it's going to pull back a little bit, even if it's going to continue in the direction. So it's going to move, pull back, then continue moving. That little pullback is called correction. So the fall in the market has pushed most markets to their support. Okay, the fall has just been breaking support, breaking support, breaking support, breaking support. It's pushed most markets to like their low support, like their lows of the year. Okay, some of them have had their lowest of the year in the last week. Okay, and some people just arrived at their low of the year last on Friday. Example is crude oil. Crude oil just arrived at the low of 2019 yesterday. So if what I'm saying is correct, if that notion is bought into, then we should see not just corrections, we should see reversals. Okay, we should see reversals. I placed some trades on Friday, hoping that there would be reversals. The reversal started on Friday, decent profit. Didn't close the trades yet. I didn't even know yesterday was Friday, so I was just checking, and then 11 o'clock I realized that nothing was moving. So I was like, what's going on? And I was like, oh, today is Friday. Markets are closed now. So, yeah, we're going to wait till Sunday night and we would see how the market reacts. If markets begin to pull back, then that means people have just realized that, look, hey, we've overreacted to this thing. So Roy made £2,000, excess of £2,000 in last month. I mean, as a trainee, as someone who is still learning to trade, if you're doing £2,000 a month, that's decent. That's without. Now, picture this: if you do that on a demo account, you will do that on a real account. I can promise you. You probably do more than that on a real account, because what happens is once you see real money, you get more discipline, and you just get, because imagine you have a job. Okay, imagine you have a job that pays you £1,500. Exactly, that's someone's full-time job salary. Okay, that's Ivana has a job on the side besides working in Havilah Financial. Okay, she's a project manager. She loves project managing. Okay, so she's not doing it because of money. She just loves to manage projects, and because that's the nature of her job in Havilah Financial. So she just wants to be there for a little longer, get as much skill as she can get as we begin to build our own company. And so that's how much she gets paid in a month to be a project manager for TFL, one of the biggest and the highest earning public company in the whole of United Kingdom, TFL. They turn over over £300 million a day from just top-ups, from just Oyster card top-ups. They're rich, even though they give us some shambles service, but hey, what can we do? But yeah, she works for them as one of their project managers. So some of the things you see TFL do, Ivana works on those projects. Okay? And that's why she's a very excellent admin person. You would agree with me. But that's how much she earns in a month. Of waking up early in the morning and running down to TFL. So imagine you made that, by just leveraging the knowledge that I gave you and your time. So if that was your real money and you do that, you're better than someone waking up. You have your time, you have your life, and you're doing good financially. So I want to believe that you all will agree that you've gotten value. Havilah Financial has given you value, demanding nothing in return except that you just trust and believe in what we're saying to you, and that's a proof. And if I'm right, Roy, you didn't know anything about trading coming into this class. Did you know anything? Did you have any prior experience? Nothing about trading. And you're already doing numbers. And don't even think, oh, it's because I'm doing demo account and the money is not mine. I'm telling you, if you don't make money on a demo account, you cannot make money in the real account. You're trading the same market, okay? So it's not fake market, it's a real market. That's exactly how you would do, okay? So well done, Roy. It shows that you in as much as you were busy with school, you put in at least a decent amount of time to place trades and to expose yourself to risk and to make mistakes and to learn from your mistakes and get better. That is the soul of a trader. Okay, you must take risks. You can't withdraw and panic and say, "Oh, I just don't want to make a mistake." Well, I'm sorry, you don't want to be a trader. If you want to be a trader, you've got to make the mistakes so that you learn from it and you know what not to do. Okay, so well done, Roy. I would have spent about 10 hours in total in January. You can imagine that. Who does 10 hours shift in a whole month and make £2,000? That is bonkers, right? Welcome to my world. And Mohammed as well, thank you very much for your consistency. During the course, I see there are certain names that I've seen so often, I can hardly forget your names. And if you guys really paid attention to everything you've heard, if you pay the attention, it will pay off in the future. So we're just gonna get on with what we have to talk about today, and I would hope that everyone else will catch up on the video of this class. So in a nutshell, everything I've taught you in a nutshell, the knowledge is valuable. I appreciate that, and I'm happy you find it valuable. So in a nutshell, what I have taught you, and I am very confident I can beat my chest to it and say, go to anywhere else where trading is being taught. Go check their syllabus, go check what they've said. I wouldn't say spend money to buy their product and listen to it, because you will have spent £5,000 to realize that I knew everything this guy. Before he even opens his mouth, I knew where it was going to land, because I knew trading. Okay? So I'm telling you that what you've received for free is actually very expensive if I was to put price on it. But it is my offering, it is my seed to you guys, and I hope that seed turns out to be a giant tree in the future, and I can see you and shake hands and remember the time that we spent together learning to trade. But yeah, in a nutshell, all I have taught you is I have sensitized you to the global financial market. I've let you know that there's something out there called the global financial market. Okay, it is the one market where everyone comes to trade in the world, and there's just no justifiable good reason why anyone else should be out of that market. Okay, the market does not thrive on intellectual capacity; it just thrives on people who have aptitude for learning and who just pay attention to information. It's as simple as that. And as you would have noticed, the information that is just around you every day, and you just hear them as news, are now things that you hear now, and you know how to take advantage of it to make money from it. Okay? This is what the big banks do. They just want you to focus on school and get a certificate and go get a job and earn £2,000 after so much qualification. Okay? And then you take that £2,000, it gets paid into your bank account, and then you try to spend it carefully throughout the month. And as long as that money sits in your bank account, it is a capital for the bank to go into the market to make a lot of money, because you have experts who are trading for them, make a lot of money, and you just don't get anything. You're even thinking the bank is doing you a favor by keeping your money. Okay? But they're not doing you a favor. They're making a lot of money with your sweat, and you're not getting anything in return. And for those of you who likes to do savings, the banks are happy. You keep the banks happy. Okay? I'm not saying savings is bad. I'm just saying, hey, why just put money in savings when you can do business with the money? The bank is going to do the same thing with your money and pay you 0.00001%. And you can take charge of your life and grow and grow your way out of being an employee. Okay? I've tried it and I know it works. And I'm very sure For some of you who do exceptionally well when you start trading and you stay with us, you're going to graduate from this class, but we would still be, you will still be part of our community if you want to. I'll talk about that later. And then, yeah, we would like to have some of you come on Havilah Financial and work with us. I believe Roy probably will, because I spoke to Roy. Yeah, and let's do something great together. So I told you about the global financial market. I told you about the sub-markets within the global financial market. So I told you about the Forex market, which is the biggest and the most liquid market in the world. Okay? Trades currencies, exchange the value of a stronger currency against the value of a weaker currency. And the currencies reflect the strength of the nations where they come from. So the dollar reflects the strength of the US economy. The euro expresses the strength of the European economy as a whole. The pounds reflect the strength of the UK. The Swiss franc represents the strength of Switzerland, and so on and so forth. The yen represents the strength of Japan on the Asian market. Okay, so yeah, and of course, the currencies from your country, if they are represented on the global financial market. So yeah, so that's Forex. It's as simple as that. I'm going to give you a little bit of tips on how to trade Forex today, just to add to your arsenal, because Forex is the most tricky instrument to trade on the global financial market. Every other one is just straightforward. If you're trading gold, you're just trading gold. Forex is the only instrument that you have to trade and pay. You have to trade the strength of one against the weakness, so it's a bit tricky. Everything else is straightforward. So I'll give you a trick of how to trade Forex. I was discussing this with Havana as well last week. Last week. So yeah, so market, the sub-markets, and I taught you how to analyze the market. Okay, you don't just jump into the market. You analyze the market, i.e., know what's going on in there. Know the price driver, what is likely to drive price, and what direction that event is likely to drive the price towards. There's only two directions in the market. Market can only go up or down. And sometimes it consolidates. Okay, but even when it's consolidating, there's still going to be a bit of up and down that forms the consolidation. And the consolidation is a period where people are deciding how to price the market. Should we price it higher? Should we price it lower? Okay. And I taught you how to analyze the market by fundamentals, okay, the basic things that affect the market. So a very good fundamental is this coronavirus. It's just fundamental to every market. Now, it is something that every market must consider to go on with their daily activity. So their business as usual has been affected by something that is fundamentals. Okay, so that's just a perfect example. So that's a fundamental, and fundamental will change. So fundamental is the coronavirus is a general fundamental to as many people as it affects. That then combines with different things. So for example, the coronavirus is a fundamental that is affecting crude oil, and it combines with the seasonal decline in crude oil. This is a season where price of crude oil generally declines anyways. Okay, so that's double fundamental that accounts for the decline of the price in crude oil. And then we will near the curve, the support where it then begins to pick up. Because when we get into the driving season and the flight season, the price of crude oil tends to pick up because there's higher demands. A lot of jets are flying, a lot of ships are sailing, a lot of cars are driving, a lot of generators and plants are being used because we're getting close to the hot season. Parties will be happening, events will be happening, open events will be happening. So all of those play parts in the demand, rising demand for crude oil products, and then price goes up. And of course, if there's any shortage in the production of crude oil, price just goes mad because, hey, there's high consumption. If there is low production, then there's going to be scarcity and price will go up. Okay, those are fundamentals. Okay, and that is the same with every market. Some of them, they will be geopolitical. There will be tension in the Middle East. It will be political instability. It will be elections. It will be financial reports. It will be changing policies and things like that. It could be trade war. Those are fundamentals. And we spoke about technicals, which is just chart. Looking at past data, analyzing past data to predict the future. Analyzing past data to know where we are in the present, and then where we're going in the future and why we may likely go to that future, or because it's happened in the past. Human beings are creature of habit. They tend to react the same way under the same conditions, and yeah. So, and that reflects on what prints on the chart. So we can look at that and have an idea of where price is going in the future. So that's technical analysis. Sentiment analysis is just basically what other people are thinking. So I'm telling you my sentiment now based on what I've seen. Okay, and because you guys believe in me to know about trading and understand trading, I will influence you as well. Okay, so you would say, oh, Victor says this. So yeah, that's what it is. Okay, so I have literally passed my sentiment on to you. That is sentimental analysis. And of course, there is the news. Okay, news is a drive out sentiment. It just tells people what to think about, and people just take it from there. Yeah. So those are the um, those are the different types of analysis we do in order to take trades in the market. And you guys already know how to open a trade, you know how to close a trade, you know what stop losses are. It is a way you decide how much you're willing to risk in a trade. Okay, you set it, when the price gets there, the system closes the trade for you, you don't lose more than that amount. You don't set stop loss based on price, you set it based on the previous support or previous resistance, the next possible price point where price will go to test. Okay, I believe you all understand this. Um, I'm sure it's going to be an ongoing conversation in the community when you guys move, because everyone, the course is finished now. So between now and next weekend is a 1 week period for everyone to decide if they still want to become part of the Havilah Financial community, not the class, the community that we're building. And trust me, you don't want to be out of that community. That is the future of finance. That's how much I can say for now. But that's the future of finance. It is going to replace everything you've known out there. I am bold enough to tell you that. So everyone will migrate from this group into the community group and ongoing conversation. So in that place will be community of traders. So all of you are traders. You're making money from trading. So you can begin to say, look, I tried this and it works. I tried this and it doesn't seem to work for me. That's where you begin to create a culture. Okay? And nobody makes it out alone. You want to be part of a group. There's strength in that number. And it's just beautiful. You share your joy, your winnings with people. You make money. You share with your brothers. Everybody laughs. Everybody's happy. Some people are inspired. They learn some tips from you because we're all different traders in our own different ways. We would have a common knowledge that makes us traders, but then the trader in us will emerge, and then we'll begin to just get free in ourselves, and we'll do stuff instinctively. And that could be inspiring to someone else, and you can give them a nugget. Say, look, this works. I discovered this. Discoveries will happen. People will begin to stumble into some new strategies and say, look, I tried this thing and it seemed to work. Why don't you guys try it? Okay. So you would get better in that community than just being by yourself. So yeah. So in a week's time, everyone is going to migrate out of this group so that the new set can come into the students group. So you know about how to analyze the market, you know about how to open and close trades, how to set stop loss, how to set profit, why you take your profit, where you take it. And you understand the psychology of trading, how to think as a trader. You don't chase losses, okay? If you're having a losing streak, take a step back, okay? Don't assume that you're fine. You're clearly not fine. It happens to the best of us, okay? So it's not like, oh, I'm just new. No. Even the best professionals, it happens to them. You're having a losing streak because when you lose money, you feel like, oh, I want to get my money back. And then you lose more. And then you lose more. It just sucks you in. So you need to take a step back, calm down, look at your charts again, look at the fundamentals again, reevaluate your decision. And sometimes we tend to want to trade what we know. Because I know what I'm seeing. I know what should be happening. Sometimes the market doesn't go as you think or as you know. So at some point you would have to trade what you see, not what you know. Okay? This is what I know, but this is what I'm seeing now. So I'm just going to trade what I see. Okay? There are certain times that you stick to your goals, you trade what you know. There are times that things have now changed now. You need to trade what you see, not what you know. If you don't take a pause back, you wouldn't see that. You just stick to one thing and you just keep making mistakes. Okay? So as a trader, don't chase losses. Take a step back. And when you're having a winning streak as well, don't get too excited to become careless. Okay? Don't get too excited to get careless. Maintain your discipline. Do things right. Okay? Do things right. Be disciplined and keep growing. keep going, never get into the market without analyzing. You say, oh yeah, I already know what's going on in this market. No, you don't know, or don't assume that you know. Just do it. Just have a look. Have a look at what the others are saying. And that's the benefit of having a community, because there will be a lot of information available to you. You wouldn't have to go look everywhere. Everyone will be talking about it. Okay, so it helps you to form your own sentiment. Okay, and I can tell you, most people out there are just wicked too. They will just take advantage of your mind and just say certain things to get everyone to go and put their money there. They'll just go grab it. Okay, so don't do that. That's why I said Havilah Financial is going to be the future, because we're creating a sincere, and how best can we show that we are sincere? Giving you this course for free. We could have charged money for it, but hey, we're giving it to you for free, because we have an assignment, we have a mission that is bigger than taking stipends for people. Okay, so yeah, so that's trading in a nutshell. Okay, of course, you know, there's more to it. That's like a foundation of trading. Then from this thing that I've told you, then you evolve from there. Okay, you understand the time zones, when to be in the market, when which market is active. You know, when the Asian market is active, they trade very, very early into the morning. They trade like overnight into what we call morning AM. Okay, and from the morning, the UK market and the US market overlap. Okay, and then to the Tokyo market, and it overlaps a little bit with the Sydney market, comes into early in the morning, and then yeah. So in other words, you can't be in the market 24/7. Okay, you have to be in the market when there is very good volume, which means a lot of people in the market actively trading, and there is volatility. People are making decisive decisions. Okay, so you can place your trade and the price is going here and it goes. So, sorry about that. Yeah. So I think 1 to 4 p.m. UK is right. Amazing, right? That's spot on. So from 1 p.m. to 4 p.m. the market does really, really well in the UK. So you're in the UK, you want to note pattern. But hey, if you're trading some other instruments, don't just get restricted by that. Most markets, yeah, between 1 to 4 p.m. But you may be trading certain instrument that moves well at certain times. Yeah, so right too. I mean, there are some trades that you would have, and your take profit will be after a week or 2 weeks. So you wouldn't bother what time it is. You take, as long as you enter the trade at a very good time, you're just gonna wait. Every day you're just checking to make sure that the market is moving more and more in your direction. But if you're a daily trader, if you're going to be a daily trader, you open your trade today, you close it today, I'm done for the day, I check my profit for the day, check my loss for the day. Yeah, you want to stay between the 1 to 4 p.m. But if you're going to be having, so you would work out your own strategy. I mean, I have a strategy. I have some trades that I trade for long, and I have some trades that I trade for short. Okay, so for the long ones, I'll know the entry point that I want. I'll patiently wait for price to get there. As soon as price gets there, I put in my trade, I leave it. I'll just check it from time to time to see that price is moving in my direction. And on a daily basis, there will be some trades that I'll just jump in, jump out, jump in, jump out, jump in, jump out. Yeah. So, and it could even be the same market that I've set a long trade. I will still be trading that market on a daily basis, but my long trade is still on. So yeah, that's a very good strategy to trade. So yeah, that is that. Does anyone still have any challenge about trading? You understand technicals, you understand your trends, you understand that trends can be in any direction. Okay, so there could be upward trend, a very, very slopey one. There could be a downward trend. There could be a gentle ascending trend. There could be flags. There could be triangle trends. Okay, you can see price just moving like that and it's narrowing down, narrowing down. There could be triangle trends. There could be wedges. There could be flags. There could be double tops. So double tops means price has gone up, reached the height, pull back down, climb back again, reach that same height and begins to pull back down. Once it reaches that height, you're already anticipating a double top. Okay, and once it begins to pull back down, and there is just range. Remember, range is just a channel that is just straight like that. Okay, price is just bouncing on a very, very parallel plane. Those are ranges. We still use the word range even in a trend. We would say this is the range of the trend. Okay, and sometimes range as well can be used to describe the highest point of price in a day to the lowest point of price in a day. So that's the daily range of the price. this weekly range, this monthly range. The word range is used in different scenarios, so you just need to understand the context, but you know what range means. It is 2 points between where price is tracked, okay? And same as channel and trend. So they're just words that are used interchangeably. You understand technical indicators, you understand the RSI, the relative strength index, okay? So most of the time it's always between 30 and 70. Okay, it shows you when market is being bought, and it's not overbought. Okay, most likely to turn around. So it's not oversold. Okay, as the RSI, you know, the moving average, it shows you where the real money is. It smooths out all the noise and show you where the real money is. And it can also function as support and resistance as well. So you can set it up however you want it. The 20-day moving average, which is the green line, the 50-day, which is the black line, and the 100-day, which is the red line. And you can change it to whatever you want. You can make it 5-day, 10-day, 20-day. It's up to you. I use 20-day, 50-day, 100-day moving average. Yeah, there's so many other indicators. There's MACD, moving average, convergence, divergence. There's momentum. There's volume. There is also oscillators. There are the oscillators. There are pivots. There's so many of them. One thing I didn't get to show you guys was Fibonacci. Probably I'll show you this morning. Let me show my screen. But yeah, this is us rounding up the class. If you have any challenge, please do let me know. If there's anything you're still struggling with, you would be helping someone else. Just give me 1 second, I'm just checking something. We spoke a bit about Fibonacci retracement, but not so extensive. Okay, so I'll mention it again. Give me 1 second, guys. Just want to check the message. So yeah, please ask me questions if you have a question. Please do ask me questions. I'm going to explain Fibonacci to you now. And then I'm going to show you something very, very important I wanted to share with you this morning already. And it is, let me just give you a news flash now so that you start getting excited. There is a new trading platform that I'm now using. Okay, IG was a trading platform that I use to train people and to trade myself. But I have found a new platform now. So IG is still going to remain for the purposes that I love using it for, which is to, I use it to do my analysis, my technical analysis, my charts and all of that, and to train people as well. But to actually place trades, I have found a new platform. And the reason why I'm using this platform is because it's cheaper, okay? It's cheaper to take trades. The leverage is high and the margin is low. The margin is how much you commit into a trade, okay? So if, for instance, to buy one position of crude oil on IG will cost me in the excess of £500 to buy one position. But to buy one position of crude oil on this new platform cost me about £7 to £8. So you can see the massive difference. And guess what? You still make the same amount of money, probably maybe even more. Okay, so I just felt from my heart, I'll give you guys this as a parting gift. I'll show you how to set up the account. Very, very straightforward, very easy. So what you would do is, what I would advise that you do is the same thing I'm doing. I'm still going to use my IG for my analysis, because you can't do analysis on this platform. It's terrible. The analysis is just good for placing trades and closing trade. Okay, you just place trade, close trade. So you know where you want to place the trade. You know where you want to take. So you can set your profit and set your stop loss and just put your trade in. Bam. That's what. So you just use it to execute your trade. So your analysis you will still do on IG. Still keep your demo account on IG to experiment, to try new strategies, to analyze the market. And once you've done your analysis, you know, I'm going to be placing my trade here. I'm going to be taking profit here. You just look at the price. So I'm placing the trade at 50.06, and I want to take my profit at 60.21. So you just go on this new platform and just put your trade in there. 60.21, take profit, say your stop loss. Boom, that's it. Yeah, it's worked for me so far like magic. So I'm gonna give that to you guys as a parting gift. So it helps you as well. So when you want to start, you can start with little money. When I tested this platform, I tested it with around how much? £85. Yeah, I tested it with £85. Just put £85 like change. Just put loose change in there, and in 2 days it's turned to £500. Okay, so you can imagine what that account can do over a month. Okay, so it's decent. So yeah, that's one of the good news I wanted to give you guys today. Give me 1 second. Um, Amazing stuff. I just read a message from Roy. Amazing stuff, Roy. You know I'm with you all the way. Yeah. So let me show you Fibonacci. Um, and then yeah, we can round it up. Um, and one more thing that I need to tell you, I'll tell you this after Fibonacci. So yeah, let me share my screen, guys. Give me 1 second. Please, if you have any challenge, any question, please do ask me your question. I beg you. I do not want you to. Anyways, in the community, you still get to ask me questions. You see. Yeah. So this is FTSE. Let's use this FTSE. Okay. This is FTSE 350. Okay. You know what FTSE 350 is. There's FTSE 100 and FTSE. There's FTSE 250 and there's FTSE 350. Okay. So let's use Fibonacci on this. This is a perfect setup. So if we were to use a Fibonacci of this, Fibonacci is used to know. So for example, if price is going in a direction, okay, Fibonacci retracement is, remember I told you about pullback, okay? I told you about pullback or correction, okay? So Fibonacci retracement is just used to know where price will pull back to if price was moving in a direction. So we know that there's about to be a pullback now. How far back will price pull? Fibonacci retracement will. So another word for pullback or correction is also retracement. Okay, so price is going this way, it retraces a little bit backwards and it continues going. Okay, so price is, let me use my mouse. Okay, so price took off from here, pulls down, retrace, pulls back, retrace, pulls down, little retrace, pulls down, retrace, pulls back, retrace. Okay, and then everywhere I say retrace, you can substitute it for correction and pull back. Okay, and then eventually price came to the target. Okay, so Fibonacci. So for example, when price drops to this level and it's about to retrace, we want to know how far back it's going to pull. Or say it's pulled this far back already and it's dropped the second time. We want to know how far back it's going to pull now, because this is the first major retrace, right? Because this is not really a retrace, it's a retest. Okay, price touched the line here, retested the line one more time. The line held strong, so sent price down. So now we have a lower low. Okay, the first test, first low, price came back up, retested the line one more time. The line held strong, good. Send price lower, okay, so lower low. So we now know that this downward trend is beginning now, okay? And then price retraced this time again, didn't come back to test the line. So this is not a retest, this is just a pullback. It was a strong one, but yeah, it's a decent pullback. And look, this high is still higher than this high, because don't forget that it's a slope. So this is still a lower high and lower low, which confirms a downward trend, okay? And lower low here, this is a lower high, okay? High, lower high, lower high, lower high, lower high, lower high until price go here, okay? And then lower lows until price go down. So yeah, so this pullback happened and price fell again all the way down here, okay? Of course, there's like mini pullbacks like this, but yeah, we don't want to consider those. We want to consider the major ones. So first major pullback, yeah? Second major pullbacks. And you can measure the pullbacks by pips as well, okay? Remember, pips is price movement on this side, okay? So you can measure it by pips. Let's say it pulled back like 100 pips, fell down again, pull back another like 170 pips. Yeah. So we want to know, Fibonacci helps you to know retracement. Okay. How far back price is going to pull. And I'm going to put Fibonacci on this, and then you will see what I'm talking about. So that's what Fibonacci retracement helps you do. It helps you to know. So if you're trading a long trend, you want to know where all the pullbacks will. What do you do with pullbacks? It helps you to add positions. Remember, I told you if you were trading this and you start your first position here and price does this and pulls back, you can put another sell here because you're selling here, isn't it? Believing price was going to come down here. Please keep the chart going if you let me know you understand what I'm talking about, guys. Okay, don't want to assume, just don't want to assume that you get what I'm saying. Do you guys understand what I'm talking about? So you put a sell here, okay, and price goes down. Amazing, right? So price pulls back down, and then this retracement happens. You can add another sell position here, okay, and then it goes down. So at the time price is here now, you have two positions making profit for you. Pulls back again, you can add another sell position here, and then you can then leave that one to run all the way down. So that when you're taking your profit here, you're taking profit from three different positions that would have made you profit, instead of just having just that one single position that goes all the way down. It's up to you. It's up to you. If you're brave enough, you can do that. People do that. I do that a lot. But yeah, so the retracement helps you to put that. So for example, now, let me just give you a very good example. So you use the starting point, the first retracement, and where you think price is going to find out where all the other retracement will likely be. So let's draw it now. So if I go on the charts, retracement Fibonacci will not be under technical indicators, okay? It will be under drawing. For some reason, I think it's an indicator, but it's considered to be a drawing, okay? It was developed by a mathematician and physicist, I think. His name was Leonardo Fibonacci, okay? I think he was an Italian guy. He developed this arithmetic to calculate price retracement in the market, okay? So this is it. You can see the two of them here, Fibonacci extension and Fibonacci retracement. So let's use the retracement first, okay? So you find the starting point, yeah, and you drop this bubble there, okay? So we drop the bubble here, boom, okay? And then the first drop, yeah, the first drop is here, the lowest. You look for the low of the first major drop, drop the bubble there again, then you go to the comment system change or something. Okay, no. I think they've changed it now. Before you used like 3 different, but they've changed it now. So let me just just give me a second. They've changed the way Fibonacci works now. So I think you just drop it on the 2 extremes and you see in between. So let me do it again. Fibonacci retracement. So you look for the highest point. So I want to trade from this point onto this point. This point. Yeah, boom. I think it's now updated now. Before, and then you can drag it forward to go into the future as much as you want it to go into. Okay, and you can control how far you want it to go, because trends tend to change. You don't want it to just be, because if you just leave it like that, it's just going to be too many lines on your screen. So yeah, so if we leave it here, okay, so these are Fibonacci retracement. So you would see when you're reading news, you see it's at a 50% level, or it's at a 23% level. What does that mean? This is what it means. Okay, so the 100% is where you started from, and the 0 is where you're going. Okay, and this other bubble is just to drag the line either forward or backwards, whatever. Okay, now these are the Fibonacci retracement levels. This is the 50% retracement. Now, most of the time, price is not bang on the line. It may not be bang on the line, but it will give you a clue. So for example, when I started trading here, if I knew that price was going to hit this line around here, how would I have known that, guys? I would have gone in the time past, okay? Based on this, yeah? Based on this. Okay, so let's say I drew this Fibonacci not looking at what has happened, because all of this has happened. Remember, at the time I was drawing this Fibonacci, all of this hasn't happened yet, okay? Price was just here, and I was anticipating that price was going to fall, okay? Based on what? Okay, I have looked in the past and I've seen that there is a resistance here. Okay, so price climbing up. It's not reaching resistance. It's going to start coming back down. Okay, and I've looked at different price points where price may stop. The first one is this previous high. Remember, price made this high, dipped, and went to make this high. So on the way down, the resistance that was here will now become a support on the way down. Was that true? Look at this point here and look at around here when price pulled back. Okay. Again, price pulled down a little bit below this tip, but you can see that it's consistent. Look at this tip. When price pulled up here and tried to dip, see around this level. Remember I said support and resistance is not a line, it's a region. So around this region, around this region, around this region, there's a resistance there or support depending on what side. So what I've seen is what has happened in the past up until here. I want to know what's going to happen in the future here. So let's bring our Fibonacci all the way back now. Okay. So let's say we put our Fibonacci. Okay. Yeah. So we use this pullback, okay, as the low of our Fibonacci, and we use this high as the high. And based on these 2 points, we want to know what's going to happen in the future. So we believe that when price goes up and it comes down, price is going to respect this level, okay? So that becomes our zero, which is the 22% Fibonacci level. Put it here. And now is use price and the percentage. So the price is next here. The exact price where this line is on this side is reflected on the Fibonacci, and this is the 100% and 76.4%, blah, 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 blah. This is calculated by the software. So yeah, so let's see if this Fibonacci actually means anything. So we've drawn it here, and price begins to fall, okay? So already when price begins to fall, based on what Fibonacci, I already know, look, remember I drew from this point to this point, and look, the 74.6% falls bang on the top of this hill. Yeah, bang on the top of this hill. And look at this double top, 1, 2, falls bang on the 50%. So I can already tell that my Fibonacci is good. And of course, look at this pullback here, still falls on the 38.2%. So my Fibonacci is good. So it can guide me in price actions in the future. So as price begins to descend, you see as soon as it gets close to the 76.4%, it pulled back. So already as price is dropping, I'm already anticipating for price to pull back around there. One, because look, it's a previous resistance, so it will become a support on the way down, and I can see price responded to it around here as well. So look, and as soon as price was getting into that zone, price pulled back and went to do the retest, and eventually when it came back down, it pushed below a little bit, but we wouldn't call this a break really yet, because look, it was still able to send price up. And how would I say I can't call it a break yet? Remember I told you, if I zoom this out now so that you see properly, look, you can just see this these conduits. The main body of the conduit still stayed around the line. Can you guys see that? Can you see that it's only the conduits that pushed below the line, pushed below the line, pushed below the line? These are just like loud noises. Okay, the real money, the real activity stayed above the line. So the line is as good as when this tip just touched it. Boom. This tip just touched it. Pew. Here. Don't mind my pew. Okay. It's just for extra effect. So the tip just touching it here, we call it a resistance. And on the way down, it should be a support. It doesn't mean that it's just the tip of the candle that will touch it to make it a valid support. Something like this still makes it a valid support, kind of, because even though price pierced it many times, the body of the candles pulled back and stayed around that line. Poked below it, pulled back. Poked below it, pulled back. Poked below it, pulled back. And then eventually it sent price up. Okay? So remember, all of this happened in the future after this Fibonacci has been drawn based on what has happened here. Okay? The reason why we drew it, we want to know price pullbacks that would happen in the future. And look, this held, and when price went down, price didn't stop at this 61.8% at all. Price just cruised past it, which is fine. But see, when price was coming back up, price respected it. It became a resistance on the way up. Okay? Because don't forget that in the future, when this is happening, you just know price is moving from this top to the bottom. You don't know how the price is going to form a zigzag. Okay? This Fibonacci helps you to see that. Okay, that's basically what Fibonacci does. So this is Fibonacci retracement. For you guys, you can see price respected this again at the 50% level. Even though price poked below it, you can see the body of the candle stayed around the line. Okay, only the noise was at the bottom of it, and then eventually price went back all the way down to. And then when price was climbing back, when price reached the destination and was climbing up, the 50% stopped price again and sent it back down. Okay, and then even here as well, and you can see this 38% catching price here, sending it back down. Eventually price broke it here, but see, price is still under the 50%. Okay, under the 50%. And if you go back in the past to see if this 50% has been a resistance before, yeah, right, it has been there. 1, 2, before it actually broke. and then another one here, there, acting as support here, and then of course held here, and the price didn't even get close to it. Price just went back down. If we go back in the future, of course the trend is downward. So yeah, so this line, as soon as price goes below completely the 0% of the Fibonacci, you can virtually say the Fibonacci is expired. Until price comes up again in the future into that level, then you can drag the Fibonacci and bring it forward again to use it, or you can put a new one. So that is Fibonacci retracement. And Fibonacci extension does the other, does opposite. It just shows you where price is going to next. Okay, so now price has reached here, it's pulled back. I want to know when price drops again, what's going to be the next destination on this low play, on this slope play. Okay, so from here, okay, I know that when price comes down, it's going to form a lower low, isn't it? Okay, this was a low, this was a lower low. I want to know around where the next lower low is going to be. Okay, this 0% already shows it. Okay, but I don't know where the next one is going to be now because there's no Fibonacci down here. We can use Fibonacci extension for that. Okay, so how does extension work? I'm going to delete this. I'm going to delete this. And if we go to, oh, wait, just give me a second. I need to, I've zoomed my Google browser, but it's fine. Okay, let's just crack on with it. So I'm gonna go back to the drawing, gonna grab Fibonacci extension, okay, and then I think extension, the way it used to work in the past, you do this, it's gonna be a 3 points thing, this, and then you put it around where you're expecting price to go. Yeah, and you put it around where you're expecting price to go. So if I looked in the past, and I've seen a major low, okay, around here, yeah, so I'll put price there. So let's say around this level, yeah, boom, put around that level, and then so I've identified. Sorry, yeah, I dropped it now. All right then. So I've identified. So this is the swing 1, 2, okay, and I've seen this already. Okay, I want to know where the next is going to be. So I'm going to bring it to like a major low using the past. Remember, so I've seen this place as a major pullback or a major support. Okay, became a support, send price up. So I pull and price hasn't even reached there. Remember, price just got here. I want to know where price is going to go to on the way down. Yeah, so I'll find the low. You can use anyone. You can use this one to find. You can use this one too. You can use BAM, BAM. Okay, but I'll use this because it's a clean price movement. So I use this, and I'll use the time passed to find a destination that is too far. The price has to travel far to get to. Then these lines would then help me to know the price movement on the way down. Okay, and you can see that boom, this previous low falls of the 76.4%. Okay, and you can see again that it held there. So as soon as this happened, remember all of this hasn't happened. Okay, we just used the retracement to find our journey from up here to down here. Okay, and then so when all of this was happening, when price was falling here, this would have helped me to catch this double bottom. Okay, one bottom, double bottom, send price back up. Okay, so if I open my chart one day and price was just here, I know to be buying here. Why? Because this 76.4 Fibonacci has already shown me that there is a straight line support here. So price is just not going to cruise down and go touch this. It could do it, but here, most often than not, it will respect this line. Okay, and then I would have made some profit here. And if price was to go lower, yeah, lower, when is price going to be hitting this line, I would have known that it's going to be 23.6% because if I extended this, you can see the price fell bang on it. Okay, so it showed me the extension from here. When is going to be the next extension on this trend? The 23.6%. Well, they've already shown me. So if I took a trade from, say, when price touched here, I know price was going to retrace. Okay, so if I took a trade from the top of this retrace, with one top, double top, okay, I would have assumed that even price keep on doing the zigzag, it's probably going to be hitting the line around here or lower. So I would have been confident to sell from here. Does that make sense? I would have been confident to sell from here. Yeah. Let's say I was even waiting for price to, maybe price was going to go up and hit this place for me to sell. Once I see this one top, double top, I would have already put a straight line here, and I would have seen that it's consistent with what's happening here. So I would have taken a gamble of selling here or selling here. See, I wasn't bold enough to sell here, thinking price was going to go up, pulled back down, came back up, started pulling back around here again. My line would have been here, anticipating this to happen anyways. I would have put a sell position here to see. When price drifted this low, it's giving me enough profit to stay in the trade. Okay, so even when this happened, I will still not be scared because I'm still in the view of a profit. Okay, and then boom, 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 boom. Eventually, my break happened. Okay, and then when price was coming down here, I would have seen this double bottom. Yeah, so I would have taken my profit. Yeah, because I would know that something may happen here. Take my profit here, and then watch what happens. When price pulls back up to this level again, I will sell again. Okay, because even if price eventually goes to test this, probably, especially because a line has been holding here, I will sell here. I have enough money to stay in the market if price was going to do this before going down. But you see, most often than not, it will go down because the line is holding. And then I want to know when next price will hit this line. This will have helped me know. So I would have set my take profit there. So even if I wasn't watching, I won't set it bang on the line. I was saying like maybe a few pips before the line. Yeah, that's how to use Fibonacci. So that's that. I believe that's the only thing that I didn't touch on. Everything else I've taught you guys. So watch this video again to understand how Fibonacci works. I'm going to stop sharing my screen now. Oh, okay. Actually, there's the last thing I need to share with you guys as we round up this session, and it is the new platform to trade on. I'm not going to talk much about it. I will do a tutorial on how to set up an account, and I will put it in the group by Wednesday. I will get Ivana to put in the group by Wednesday, so that all of you can sign up on this new platform. It's cheaper. It's going to make your life easy. And it's going to be in the community group as well for those that don't sign up until we move on with you guys. This will be in the group. So if I share my browser again, yeah, and this is it. It's called IC Market. Okay, it's called IC Market. Let me refresh the screen. Yeah, so this is what it looks like. So IC Market, they've got a demo account. You don't need it. Yeah, just open the real account. So if you open the real account, yeah, so you just fill in your details here. Very, very straightforward. I don't want to do the tutorial now, but I'll do it again. Fill in your details, open the account, and then you can start placing your trades on there. So a simple way it works, or how I expect you to use it, is if you, for instance, you've seen this and you want to take a trade from here to here. Yeah, you want to take a trade from here to here. You look at price is already here, so you don't need to look at the opening price. You're just looking at where you want to take a profit. Okay, you want to take a profit here, and price here is going to be 2231.64. Okay, so all you do is you go onto this is what it will look like on a desktop. That's why I said you can't do much here. It doesn't look nice on the desktop at all. But you do most of the trades on your mobile phone. I recommend you do it. But say this is the platform. Yeah, so what I would do is, I believe you can take a trade maybe because, yeah. So buy and sell, yeah. You put your lot size here. Yeah, you put your lot size here, you buy or sell. And if you click on buy or sell, it should give you another pop-up box to put in your take profit and your stop loss, blah, 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 blah. So you just put in the number you gathered here, okay? So on that pop-up box, remember on IG, if you were to place a trade on IG as well, it does similar. This is so annoying. This thing is, wait, just give me a second. I don't even know why I didn't do this all along. Oh, it's still there. It's still there. But hey, if you try to place a trade on IG, you know it shows you lot size, stop loss, take profit, all that. So the same thing. If you try to trade on that platform, it's going to show you the same thing. You just enter the number, the price point that you want to take a profit. I'll show that in all the tutorial to make all sense. So yeah, guys, that's that. That's us rounding up Havilah Financial call session for this Market 360. It's been a pleasure teaching you guys, taking you through the journey. Amazing. So Ivana, if you want to take note, Mohammed is going to be in the community. I believe Roy is going to be in the community. I believe Ada will be in the community. These are people that I know personally, but hey, okay, give me 1 second. I think Ivana must have sent me a message. Okay, so the community group is now live. I believe there will be a link in the students group that you need to click on, and then automatically you will be added to. Okay, the tax we owe on the profit we get, it's tax free, completely tax free. You don't pay no tax. How much tax we should pay? No tax. That's the best news of the year, isn't it? No tax, guys. You don't get to pay no tax. So enjoy your money. Your money is yours. All the risk is yours. So the reward is yours. So enjoy your reward. There's no tax, guys. It's beautiful. That's why I said I don't see why no one. Look, you already go to work, shifts, and you're getting paid chicken change after taxes, taking almost all your money. Why would you just take that money and go spend it? You need to invest in yourself, grow the money, so that the profit you make is not taxed. And then that's the only way to financial freedom, guys. Salary will never give you financial freedom. This will. You thank me in the future. I promise you that. If you really, really use the knowledge I've given you, you would give me a hug in the future and say, thank you so much. It's a pleasure meeting you in my life. And hey, it's a pleasure meeting you guys too. Because the more I teach, the better I become as well. So thank you so much, guys. Again, I will drop the video Wednesday for the tutorial of how to register to the new trading platform. It would really help you guys. In the absence of, if there's any information that needs to be passed across, it will be put in the group. Okay, I don't want to make the session too long. Okay, if there's any more information, we will put the information in the group. And I think Ivana is trying to organize a bit of a link up. Okay, and the last thing I need to mention before I go is, sorry, who's this? Okay, so the last thing I need to mention before I go, again, it will be in the group because the promotion will be going on anywhere. For the next set of Havilah Financial, it's not going to be free. It is free, but it doesn't. It's not like you guys. You guys are very lucky. Okay, so the next set coming in, they would actually pay for their tuition, but then they will get their money back after the course. Okay, so it's still going to be a 3-month course. So you guys came in free, didn't pay anything. The next set, they will pay for the course, and then at the end of the course, we will give them back the money as their starting capital. Okay, so they would pay for the course. At the end of the course, they get their money back. So they still pay £0 for it. It's just that it helps for the business to run, and it helps us to make them a trader so that they don't just learn it and just put the knowledge under your pillow and then you just go about your life. Okay, life has a way of making you do that. So, but at least when you start and you have a capital to actually start practicing, or not practicing, start trading on, after practicing for 3 whole months, that aids or increases your chances of creating a new financial freedom for yourself. Okay, so they pay, the tuition is going to be £500. Okay, so they pay £500 to enter the course, and at the end of the course, you would have £500 as a capital to start your trading. Okay, I wish I had done that for you guys, to be honest. I feel like I robbed you guys because now you're going to be getting your £500 back if you had paid £500 in the beginning. And then that would just be capital for you to trade. So imagine this new platform I told you about, and you started with £500. You would do madness with it. But hey, the next set, that's what they're going to be doing. I'm hoping that I can have people from this class that will be able to teach. And you can come and work with us. You would get paid. But yeah, that's what the next set is going to be. So what isn't that for you guys? If you're able to refer anyone to the course, you get £50 instant referral fee, okay, or referral payment. So if you refer someone to the course, as soon as they register and they pay for the course, you get £50. So this is a way to fund your new trading platform as well. For example, if you get 4 people, that's £200 for you to start trading, because on every person you bring, you get £50. So you want to share the word with your friends and to get the £50, you don't have to be on the course. If you just happen to be someone who know people who want to learn to trade and are willing to register on the course and pay for the course, you still get £50. So there's no limit to how much you can make on this. You find someone, they come through on the program, they register. As soon as they register, you don't get the £50 after, you get it straight away. So as soon as they register for the course, you get £50, okay? And you can get as many £50 as you can refer people to register the course for. So yeah, that's it. So please share the word. The promotion will be going on in the groups. And I believe that should be the last thing I'm telling you guys for this morning. And then we're going to get you guys to do a testimonial. So tell us how you feel about the course. Yeah, just give us an honest opinion about the course, and we will put down our website. Okay, we'll put down our website. This is a testimonial from our course. So I expect some of you guys to please write a testimonial for us. Just tell us how you feel about the course, how it's helped you, and how you think it's going to impact your financial future. And then we would like to display that on our website just to let people know what we're doing. So thank you very much, guys, for most of this information. Ivana will put it back on the group again, okay? Because I know I've spoken a lot. She will put it on the group. You will get to be able to ask your questions. But really, we want every one of you to come with us on this journey. We don't want to say goodbye to any one of you. We want you to come with us on this journey. Let's build a new financial economy. It's going to be great. I promise you. Okay, so look at this face now and look at this background. You probably would be seen. Next time you see me, I've paid the price, so I deserve a good life, okay? And I want us to have that good life together. So thank you very much, guys. This is Victor Oladapo signing out on the Market 360 of 2019/2020, and I hope we continue this relationship into an amazing future. Thank you very much again for coming on the course. Thank you for staying the duration of the course, and I hope that you have an amazing and glorious future. Yeah, so thank you very much, guys. Have a lovely weekend, and expect an update by Wednesday, and then we'll see you in the community. Thank you very much. Have a lovely weekend. God bless you.